All right, well, here we are. Welcome everyone. You made it. This is Damon here, and we are going to get into the official shark strategy that you guys have been seeing so much about social media, everywhere. Just, the exact strategy that Derek and I use to produce these insane results, okay? And I'm going to sit here and explain it to you step by step how exactly we did it and how you can replicate these results for yourself, okay? So go ahead and buckle in, get a notepad, and let's get started. All right, so a fundamental intro to Forex. Forex being, foreign exchange. It's we're exchanging one currency for the other as their values fluctuate in the markets, okay? Now, to effectively trade the Forex markets, you must first understand the fundamentals that drive it. Knowing what is going on behind the scenes, knowing the why behind each move will make you able to effectively predict the next. I think a lot of people will agree with that. I think that a lot of these other groups that teach Forex neglect that. They don't teach you the why behind what's happening. They only tell you that when this happens, or when you see this, then do this. They don't tell you why, right? I've always wanted to know why. Why is there an increase of price around this time of day? Why is there usually a reversal around this time of day every day, 5 days a week? Why is that? What's going on? Okay? So once I learned that, that really changed the game for me. Okay? Now, we'll get into that a little bit later. Let's start off with some key terms. That way, when you get into the chat group or the live webinars, you know what the heck we're talking about, right? Using acronyms, funny words that maybe you're not familiar with. We'll get into that so you can keep up with us, all right? We don't want anybody falling behind. Now, ADR is the average daily range of a currency. This is a tool we use pretty often, and I'll go into that a little bit later. Go flat. If I tell you to go flat, that means just close all open positions, okay? Because oftentimes we do that before news or at the end of the day maybe, or oftentimes we always go flat for the weekend. I never leave positions open over the weekend, okay? Unless they're in a huge profit and I'm trailing it, which is rare, us being scalpers. Usually we're in and out real quick. So consolidation and accumulation, that's any area where price appears to chop, when in reality market makers are building positions in these areas. They're accumulating volume, okay? They're building liquidity pools, okay? Correction is the lowering of price. A rally is an increase of price. Okay, you hear me say rally all the time, all right? I'd be like, look, I'm really looking for a rally right now, or hey, we just had a huge drop, expect a rally, things like that. I say that one a lot. Cross pairs comprised of majors other than U.S. dollar. Now, we trade cross pairs a lot, specifically GBP, JPY, which is the pound yen, the pound against the yen. That's something that, in fact, that's all I trade. That's the only currency pair I trade, and it works for me. And there's reasons for that, and I'll get into that later. Now, stop hunt, and this is important as well. A quick false move that presents at session changeover, okay? Make note of that. Market maker. The group of people or institutions that have power and influence over the market, have huge equity base, control over media, influence in the political arena. Those are the people driving these markets, okay? Those are the ones that are out to get your money, okay? Very nasty people, and I'm about to teach you a way to get your money back from them that they've been taking from you for so long, okay? So sit tight. On the board means having open positions, okay? If you're on the board, you have open trades somewhere. Open float is the amount of equity tied up to manage your open positions. Now, this could be negative or positive. When it's negative, we typically call it drawdown, Drawdown's a word that we use a lot, and that's basically that you have open positions that are presenting some kind of negative equity. It's unrealized profit or loss, right? You haven't closed the position, but the open float is negative, so you're in a drawdown, okay? We use that often. Now, they're working against you, when I touched on market makers. Now, the market makers and major institutions are working against you in this arena. They don't want you to win because when you lose money, they make money, okay? It's really not even a cold hard fact because it's a fact about the world. If somebody's making money in the world, somebody else is losing it, okay? That's just, currency or whatever you're using as an exchange for goods or services, leaves one person's pocket, goes to another in return for something, right? That's just how the world works, okay? Now, so we must understand tactics they employ to beat us. These are best seen as false moves, and they present at these times. The beginning of the week, Sunday going into Monday, the beginning of the day, the trading day that is, the beginning of the session, right? The end of the session, the end of the day, and the end of the week. Okay, you always see false moves here, some kind of trap move. Okay, don't worry, they have limitations. Market makers are limited in what they can do. They have restrictions placed on them by the IMF and the World Bank. That is why ADR is such a useful tool. The average daily range of a currency, right? So they can only move pairs about 200 pips a day, 600 pips a week, again, dependent on the ADR of that pair, right? They do not have unlimited equity. However, they have a lot, okay? They can really move these markets, but they're not unlimited. They are limited by a weekly net change allowance. Means they can only change so much per week, because if not, they would destroy the world economy and trade balance, okay? And they just can't do that. So they got to segment these seasonal trends, weekly trends, intraday trends. They really got to segment them and, go back and forth a little bit with a really progressive net change. It can't just be, snap just like that. We just went up 1,000 pips, right? Unless you have something like Brexit happen. And if you don't know what Brexit is, then look that up. But yeah, that's a very rare occurrence, and you always know about that ahead of time, so don't worry about it. Okay. Now remember this: the fast move is the false move. Okay, when you just see a super quick candle that just moves against you really quick, suddenly you're down 10 pips just in the blink of an eye. This is used to freak you out. Okay, that's exactly what it's for. It's fast. You were in profit. Now, boom, second later, you're down 10 pips. You're down a ton of money. Okay, now, this is used to freak you out. And I guarantee you've been in this situation, and it did freak you out. And you made an emotional decision when you should have been logical, right? That's exactly what they want you to do. They want to scare you into thinking emotionally and irrationally. Because then you'll start making mistakes, then you'll start losing money, then they'll start making it. Okay, the fast move is the false move. Never chase the market. Let it come to you. Market makers drop to buy. Market makers rise to sell, jump to dump, or pump to dump, right? Okay, the real trend is slow and steady, not fast. The fast move is the false move. A powerful or extended move is always followed by consolidation to bring traders back into the fray. Now, there's other reasons for this. Again, it's kind of irrelevant. I only want to teach you guys the condensed information, the pure gold information that you need to make money. Okay, so this is all of the golden info that we've accumulated, packed into one strategy. Okay, and it is just phenomenal. Now, identify the trading zone. Identify key points on the chart where you can safely enter into a trade, the daily high or low or weekly high or low. Overextended markets on the 5-minute and 15-minute charts. I'll show you examples of this. That's actually where I look for my trading areas, is an overextension on the 5-minute. Okay, that's my go-to. These high probability setups will allow you to be most profitable and run the smallest amount of risk. Always start your trading day with this analysis, okay? Now, trading hours. This is set for Eastern Standard. Asian session, 8:30 p.m. to 3 a.m. with a gap from 3 to 3:30 a.m. That gap is market maker shift change. They're humans. They work in shifts, okay? So that 30-minute gap is just, you're going to see a lot of consolidation typically, and that's where one market maker is, giving instructions to the next, okay? They're human. They work in shifts. They have jobs, okay? London session, 3:30 a.m. to 9 a.m. Gap 9 to 9:30. New York session, 9:30 a.m. to 5 p.m. Okay, end of the day gap from 5 p.m. to 8:30 p.m. and then we reset in the Asian session. Okay, we do not trade the Asian session. It's a very slow market with high spreads. Start trading going into the London session and stop trading coming out of the New York session. Okay, that's where we trade, London and New York. Okay, a lot of times Derek and I hit our profit targets, before London is even over. We just go to sleep. because contrary to popular belief, we do have lives. You know, we don't just eat, sleep, and breathe charts. We used to, but now we've really just, you know, found a super effectively and efficient strategy to where we get our trading done in a couple of hours. And then we can go on about, because that's what we're going for here, right, is time and financial freedom. If you're glued to your computer for 12 hours a day, that's, you know, that's not really freedom, is it? Yeah, you're working from home, but, you know, you're still, you know, it's not the freedom that I had envisioned for myself. And I'm sure you kind of thought the same. You know what I mean? So we can get our trading done in a couple of hours, a couple of good hours of trading. Okay. Now, tools used in our strategy, you need to take note of this, and these indicators are on the website. I believe it's step 2 or step 3. I'm not sure. ADR, which is the average daily range, we discussed that. The daily, weekly, high and low indicator, we use that. Psychological levels are phenomenal, okay? This is true support and resistance, and basically what it is, me personally, I have my personal template on the website. Again, it's I think it's step 2 or 3. Don't quote me on that. So that's basically a horizontal line every 50 pips. So for example, if price 133.00 line, 133.5 line, 134.00 line. Okay. Now I do a solid line on the .00s. Okay. So 133.00, 134.00 or 00, excuse me. I do solid lines there. Now on the halves, 133.5. 134.5, 135.5. I do dashed lines there, okay, because they're not quite as significant. They're still powerful, okay? So just take note of that. The TDI we use a lot. However, I modified it, and I removed the signal line because it's total trash, okay? That's just retail traded garbage. By the time that you actually get a signal from the signal line to get into a trade, you're already late, okay? That's retail trader BS that you just stop doing, okay? Bollinger Bands, otherwise known as volatility bands. News headlines indicator, always go flat prior to news. Now, we have an indicator that goes right on your chart that shows you the upcoming news, and it's very good because you don't want to get caught in unexpected news events, right? So we always go flat prior to news. Along with that, we use the 100 and 200 EMAs. I usually only really take note of the 200, but, you know, 100 has been useful in some situations. Now, those are, if you're not familiar with that, that's exponential moving averages. Okay, moving on. Well, market sharks, you know, us as sharks, we're scalpers. We scalp, okay? What is that? We're very short-term traders. Now, let me tell you a little golden nugget to wealth, okay? Not just wealth, but, you know, killing the markets, okay? The key to huge success is microtransactions. Write that down. Okay, stop going for the big home run trade. Make a bunch of small winning trades. Okay, risk a small amount. Make a bunch of small trades. Stop looking for this big home run. Yeah, big fish. I caught it. You know, I just made $50,000 and what? Stop that. Microtransactions, key to wealth in this industry. Okay, don't let anybody else tell you otherwise. Maybe they want to make 2 trades a month. I don't want to do that. Okay, because what if one of their 2 trades went south? Now they're flatlined for the month. Okay, so it's just silly. All right, so in Forex, scalping is a term referred to as trimming or skimming the market for small profits in a very short period of time. A scalper will trade off the tick charts, the 1-minute chart, the 5-minute chart, up to the 15-minute charts as a maximum, although usually keeping it below the 15. Some scalpers will attempt to catch the quick, large moves that occur around the time of economic data releases and other high-impact news events, the release of the employment statistics or GDP, for example. Now, this is news trading, and that's not something we do, okay? So just disregard all of that. I'm just explaining to you the other breeds as scalpers. Now, who is the ideal scalper? Now, let's talk about psychology and personality, because utilizing a scalping strategy, you will be in and out of trades in anywhere from, you know, honestly, it's less than 30 seconds sometimes, but 30 seconds to 5 minutes, rarely longer than 10 minutes. Can you already see how this would affect, you know, one's psychology, or rather the personality required? You got to be kind of, you know, focused. You got to, you know, be quick-tempered, quick trigger finger. The trigger finger is huge, and we'll talk about that later. You got to be there ready, okay? You got to be sitting there ready, okay? You must have a laser focus and be willing to sit at your computer and focus on your chart for the entire session or until your profit targets hit. You must have a quick trigger finger, as oftentimes the difference between a successful scalp and an unsuccessful one is your entry. Okay? You will have a 1 to 5 second window oftentimes to execute your trade properly. Okay? So you need to be ready. You must be able to react without analysis. You will not have time to analyze the market thoroughly. So your understanding of price action is critical to your success as a scalper. Okay, and I do a candlestick tutorial on the website. You review that as well, which in fact, ideally, you've reviewed that prior to this course. So along with that, we have a TDI to make our scalping easier, which we really put good use to. Okay. Now, pros and cons of scalping. There are pros and cons to every strategy. Let's talk about those of the scalping method. Pros, you will execute and close trades very quickly. It's very exciting. It's very fun, because, you're making thousands of dollars in minutes. It's awesome. It's so much fun. This is a perfect strategy for the short-tempered, impatient trader. You'll be able to trade both ways within a trend at any time, which means you will always have a setup, no matter what. I know traders that come to the trade station at the beginning of the day, we'll sit there all day and not have a setup, so not execute a trade. In fact, that used to be me. I used to trade off the hour charts. Every hour I'd check the charts. Every new hour I would check the charts and see, if I had a good setup. I would go all night sometimes with no setup, and it would just drive me mad, okay? I'm not a swing trader, okay? Let's just put it that way. Now, cons. If you have a day job or are not able to dedicate 4 hours a day to trading and only trading, then this method might be a little ineffective for you. Try a higher time frame method, which you can use this exact same thing that I'm telling you right now. Just go to a higher time frame chart, right? So use a 15-minute chart, a 30-minute chart, or even a 1 hour chart. The same strategy, the same setup works, okay? Just the same, okay? Now, although you will see very quick profits, you need to understand that you will possibly see losses just as fast, and you need to condition your mind to think that way, okay, just to be prepared, all right? Now, when to scalp? There are specific times and market conditions that are ideal for scalping. Outside these conditions, scalping will prove to be very ineffective. You can make it work, yeah, sure, but, we're going for the gold, right? So liquidity. As a scalper, you want to focus on the most liquid markets. Now, most scalping teachings will tell you to stick to the most liquid pairs, such as, the euro dollar or the dollar yen, for example. And although these do work, I prefer more volatile markets, okay? Pairs with a high ADR and relatively low spread. My golden ticket with that, had the highest ADR to spread ratio was the pound yen, GBP, JPY. So that's why I trade that, okay? I feel like I'm getting the most bang for my buck, you know what I mean? So time of day. With pairs being most volatile during the London and New York sessions, this is ideal for scalping, as the spreads are the lowest for the trading day and you are seeing the most movement during these times. Can you trade the Asian session? Yeah, sure. It won't be quite as effective though, okay? Now, preparedness. Let's talk about some safe practices that are critical for success as a scalper. Internet connection. That might seem kind of, obvious or duh, but it is absolutely essential to have a very reliable and quick internet connection. I highly recommend even having a backup connection, such as a mobile hotspot or, another router or modem, whatever. All it takes is for your connection to drop for a few moments at the wrong time to absolutely destroy an account. Now, that's a little bit of a long shot, because if you're leveraging properly, it won't destroy an account, but you could definitely lose a trade, though, okay? So that might be a little bit aggressive there, but you can definitely cost you a trade, which would have been profitable. Okay, so always have a backup. Like, have your phone connected to your account, have another laptop and a desktop all connected to your account. So if, for whatever reason, something goes south, you have another connection to the account, okay? So distractions. Limit distractions as much as possible. During your trade session, turn off your phone, turn off your social media and emails. Make sure that you will not have any interruptions. You will need to be laser focused, okay? Now, let's talk about the TDI, which is the Trader's Dynamic Index. Let me see if I can get a little pointer tool here. Here we go, Spotlight. Cool. Now, what does the TDI consist of? Okay, it actually has another signal line in here, but I removed it, as I told you previously. So this is all we're looking at in the TDI. So we have the strength index, which is a 13-period RSI, which is this blue line right here. We have the volatility bands, which are a 34-period Bollinger Bands, which we also have on our chart as well. This is a 34-period Bollinger Band. The center line in between, this gray line in here, is a market sentiment line. You know, an overall, just shows you overall sentiment, right? And that's also what we see here, this middle black line, market sentiment. Make sense? Cool. TDR requirements. Now, let's just talk about that. I'm not sure if you guys can actually see my cursor, but if you can, I'm just going to use this because it's quicker. So, shark fins are something we call when the strength index breaks out of the Bollinger Bands. Okay, like this. You know, what does it look like? It looks like a shark's dorsal fin rising up out of the water. Okay, so we call it shark fins, right? Now, what we look for is those aggressive breaks, because what a shark fin is showing you, when the strength index is able to just break out of the volatility bands like that, that's showing us a market that just snapped, right? It just went really, think of the market as a rubber band. It just was, in order for, where's my cursor? There it is. In order for the strength index to break out of volatility bands, we need to see a really aggressive move. Okay, so think of the market as a rubber band. When it just moves real quick like that, just boom, out like that, it's like a rubber band. It's gotta resume its shape, right? It's gotta come back a little bit. Okay, now this is what our method is based on. We look for these overextended markets. So as you see here, what we have the shark fin right down into the 25 level. Perfect. Little bit of a squeeze, but that's okay, because we're in such an extreme condition down here, this huge candle right there. I would have started piling on buy positions for all three of these candles. And then boom, we had a huge rally. All right? Crazy. All right? Now, only extreme conditions take trades in the 68 to 75, 32 to 25 ranges on your TDI in regards to the strength index. Now, these are going to present the most highest probability trades. Okay? You follow me? I'm kind of going fast, so feel free to pause, rewind, do whatever you need to do. Okay. Now TDR requirements continued. Let's so sentiment line will bounce between the 32 and 68 levels, giving you an overall trend bias. Okay, so check this out. The gray line is down here near the 32. We're looking for long positions down in here. We're looking for places to buy, right? Okay, so for whatever case, you did take this here and you didn't take your profit there for whatever reason, you would have been fine, because the sentiment line's coming way down low. You would have got out over here. Okay, would have taken you, you know, maybe a half hour, but you would have got out without a loss. It's okay. Okay, so we're looking for long positions down in here. Now up in here, we're pretty high. We're right up into the 68. You see this gray line up in here? We're looking for shorts. Okay, we're looking for places to sell the market, because we're up in an overextended situation. You see this? Now we're way up on the strength index, up into the 75. You sell this, you could sell this, you could sell this. And now we're starting to put in a little bit of divergence right up in here. Okay? Now, you know, and again, here, look at this major shark fin right up through there, right onto the 136 flat psychological level. Pay attention to these. Very powerful, okay? Now, double confirmation. This is why we use the bands on the charts, because it shows you exactly where. You know, it's a double confirmation is what it is. So in correlation with the TDI. Now, what do we have? We have a shark fin on the TDI right up into the 75. Where is that right here? Boom. Right into here. Sold that. That could have been, you know, 5-10 points. Usually sometimes we only take 3, but that's all you need. Scalpers, micro scalpers. Okay, and again here, what do we have? Boom. Sell that right into the 200 EMA. Again, maxed out up here. Now we're putting in divergent conditions. Be selling this, and then we, you know, ended up ultimately dropping over the course of the next hour. Okay? Now, here's examples of how Bollinger Bands in the chart can save your trades. Is because we wait for, you know, the extreme conditions over here, especially coming out of a squeeze. If you see a squeeze like this, you need to wait for at least a 75 or 25 or divergence, right? Because they're always going to be more aggressive. They're not going to stop where you think they're going to stop. That's why you need to wait. Because look at here, we have a breakout of the bands, we have a shark fin, but guess what? It kept going up. That's because we squeezed right here. We were trading within a 15 pip range for the last 34 minutes or more. Okay, that constitutes a squeeze in the market. The bands are going to constrict. Okay, think of it as like a spring that's coiling up, ready to explode. So that's why when we see this happen, we need to wait. Where's my cursor? There it is. We need to wait for at least a 75 or 25 or divergence. Now, we got our 75 right up into here, right into this candle right here. Okay, and then boom, straight to the sentiment line. Phenomenal place to take profit because that often acts as support and resistance. Okay. Now, here's a rule of thumb that I use for my trading. It's just, one of those tricks that you develop after doing it for a while, that you just kind of start to notice things that just kind of, help. You know what I mean? So, all right, check this out. So we're looking at the 5-minute chart on the pound yen. Okay. Now, take sell signals on the 1-minute chart when price rides the upper bands on the 5-minute. So check this out. We're up here. We kind of squeezed a little bit right here. So I'd be cautious of this area. But, we're riding the upper bands on the 5-minute chart. So I would have been looking at a 1-minute chart while this is happening. And those sell signals on the 1-minute would be valid to me and high probability setups because we are maxing out on the 5-minute. We have a higher time frame confirmation. Okay, and we'd also, conversely, we would take buy signals on the 1-minute chart when price rides the lower bands on the 5-minute. Okay, this is just going to present much higher probability setups. Okay, so we're riding these lower bands down here. We're not really squeezing. Now, the buy signals on the 1-minute would be very valid as a result. Okay, now in here, we're not really overextended anywhere. Okay. So this is just an area that just sit away from it, okay? Now, breaking it down, let's break it down a little bit. The RSI, only trade extremes. The whole ideology behind this is, countering overextended markets, and we've gotten it down to a sniper precision, okay? So only trade extremes above 68 level, look for shorts, below 32 level, look for longs. The market sentiment line. When sentiment is at the 68 level, expect a bearish bias. When sentiment is at the 32 level, expect a bullish bias, Bollinger Bands. Avoid the Bollinger Squeeze or tightly consolidating markets. Volatility and liquidity is ideal. Okay, keep that in mind. Candlestick patterns to note. There are reversal patterns that when you train your eye, your reticular activating system is what it's actually called, is to what subconsciously see these patterns can be very beneficial as scalping. They're the same patterns that you see on the larger time frames, however, they happen much faster, and you must learn to recognize them before they finish, rather than after as you would on a higher time frame. So you need to be able to recognize them as they're developing. You know what I mean? So the reason is that you want the absolute most ideal price to enter the market, being that your target is only 5 to 10 pips, often less than 5. 3 to 5. Believe me, you might be sitting here thinking like that's not a lot, but hey, it's plenty. It is plenty. Okay, let's take a look at some as they played out. Now check this out. We have these pin bars here. All right, often at points of reversal. You see these? Now M and W formations, right? Double tops, double bottoms. We just call them M's and W's, and a lot of times these are divergent. Is what's going on. Is basically when we make another run to a level and fail to break it, right? And it shows us divergence, right? The strength index when price closes higher or same level, and the strength index is not following that, is not correlating with price, that's divergence, right? Or if it closes lower or same level and the strength index is not following that or respecting that, that's also divergence, all right? And we'll get more into that later. So M and W formations, you see this here, little divergence there. Little one here, however, this isn't in our trade zone. It's just an example. This one's beautiful. This big W up in here. uh, 2 pins high, right on 137 flat. That was a good place to sell. Oh, look how extreme that is over here. Wow. That was a phenomenal selling opportunity right on 137 flat, past the 75, shark fin, pins up in here. That was awesome. That was great. Okay. Now, let's look at some trade opportunities. Now, if you were to short this and hold it to the sentiment line, that was actually 35, not points, pips, my bad. It was pretty late at night when I actually made these slides. So that's not points, that's pips. Okay, so that was actually 35 pips, not 3.5 as points would be. So check that out. You know, why is this a sell opportunity? A little shark fin down in here, huge breakout up in here of the bands, pretty high. Good place to short the market, and then we fell right to the sentiment line. Now check this one out. Oh, we just had this one on the last slide. Yeah, 25 pips right down to the sentiment. Now, we don't hold them that long. You can if you want, but we really don't. Phenomenal selling opportunity here. You know, we have shark fin over here, past the 75 after the squeeze, right? Remember, we have a little squeeze here, so we're going to wait for an extreme condition. Okay, now, and we got it. We passed the 75. We'd start selling that market right up in here at the 137 flat area. Okay, now, what do we have? We're bottomed out. We have these shark fins down here. We're starting to put in divergence. You see this? It's really minor. It's really minor. But do you see this? We put in a lower low on the price. You see the strength index didn't really make a lower low. Kind of just stayed where it was. Minor divergence there. Okay, we're going to be looking to, you know, we could have bought it here, and you could have bought it here. Look at these large candles just snapped, right? There's a squeeze there, so I probably would have not taken this one because you see this squeeze. So I probably wouldn't have taken this one. I would have waited for divergence or the 25. In this case, we did not get a 25, but we did get divergence. So I would have bought this market up in here. Okay, that makes sense? Now, here it was, you know, that was 10 pips if you would have taken it, and this one was 15 if you would have taken it. But, you know, again, that's greater than our targets, but these are just examples. Now, we went into a really tightly consolidating market after this. I probably would not have even touched any of this garbage over here. I mean, if you look at this, it is just a tiny market. That is ugly. So, yeah, when you see stuff like this, just take a break. Go for a walk. Live your life. Go to the gym. All right, now check this out, the squeeze. Periods of consolidation present early warning of a squeeze approaching. The bands are set to a 34 period, therefore they are averaging the last 34 candles. If you see a really tightly consolidating market, you know that a squeeze of the bands is coming soon, okay? So it's an early warning. Do not, I repeat, do not counter the breakout of a squeeze until your strength index reaches at least a 25 or a 75 level, or you get divergence. Now, if we're trading within a 15 pip range for the last 34 trading bars, that will create a squeeze, okay? Do not counter until you get a 25 down in here or 75 up in here on the strength index in your TDI, the RSI. Okay, now here, check this out. This one, you may have shorted the market up in here, and then I stack my positions. I always enter, you know, 2 to 3 times. So maybe entered once there, and entered once there, set this one to break even, this one small profit, this one would have been the money maker, right? Okay, that's why it's important not to over leverage, because you need room to continue to enter the market, okay? Now, squeeze rules. Do not, guys, do not counter the squeeze until conditions are met. After the squeeze, wait to enter below the 25 or above the 75. Don't hold first move more than 5 pips, okay? Just don't get greedy. The only times I've ever really had a loss is when I got greedy and tried to go for more pips than I should have, okay? That's the only time, all right? Wait for the retest of divergence. It has to touch the Bollinger Bands. If it doesn't touch the bands, then it's not a valid trade. If the Bollinger Bands are below the 50 on the TDI, do not sell. If the Bollinger Bands are above the 50 on the TDI, do not buy. Do not trade unless it has touched the bands on our chart. I need to repeat that, okay? Be patient. Let the trade come to you. Do not trade the first half of the Asian session or the end of the New York session, okay? Is the markets really start to slow down at the end of the New York session. They're really just ugly at the first of the half of the Asian session. Wait for above the 75 or below the 25. You know, I'm repeating myself, but it's very important, okay? Do not do not counter trade the squeeze until you get the right conditions, okay? Look, guys, the only time you'll ever get stuck in a situation is for countering the squeeze too early or getting greedy and not, taking your profit when you should have. Okay? That's the only times you will ever lose with this strategy. Now, trade signal. General rules, trade signal using candlestick charts. Let me just, this is kind of like a game plan I've written. Price must be greater or equal to 15 pips within the last 34 trading bars. If a market is within a 15 pip range over the last 34 trading bars, do not counter until you have a 75 plus or 25 minus condition on the RSI or divergence. Price bars must break out of the Bollinger Bands. This is a signal to trade the opposite way, right? The opposite direction. So if we break low, we're looking to buy. If we break high, we're looking to sell. Your entries are never within the bands, okay? You always execute outside or on the bands, right? As the price breaks on the outside, that's your entry. You do not enter trades on the inside of the bands. I need to repeat that. You do not enter trades on the inside of the bands, okay? Do not. RSI must break out of oscillators Bollinger Bands at least the 68 level or 32 level of the RSI. 68 plus, sell. 32 minus, buy. If price puts in a higher high and RSI puts in a lower high, divergence. Counter when price touches the higher bands on the now divergent condition. If price puts in a lower low and RSI puts in a higher low, divergence. Counter when price touches the lower bands on the now divergent condition. Be flat 45 minutes before and after major news events, which are high impact news. Okay, never have open positions prior to high impact news. General rules continued. To be safe, especially when starting out, follow this guideline. See photo previously, the rule of thumb photo. You can just rewind it and go check that account. Again, that slide is called rule of thumb. Check that out for this. For short trades, price must be touching upper bands on 5 minute, then find entries on the 1 minute. For long trades, price must be touching the lower bands on the 5 minute, then you find your entries on the 1 minute, okay? Now, daily pre-trading checklist. Check news for the day. Analyze the 15 minute. Where are we? Overbought, oversold, divergence. Analyze the 5 minute. Where are we? Overbought, oversold, divergence. Analyze the 1 minute, your entry time frame. Where are we? Overbought, oversold. What are we doing? Are we trading in greater than a 15 pip range over the last half hour? Is the spread 1.5 or lower? Okay, these are important. Now, targets and stops. Profit targets in pips. If you're trading the 1 minute chart, really target 2 to 5. If trading the 5 minute chart, maybe 10 to 15. If trading the 15 minute chart, target 20 to 30. Okay. Stops. Now, this is for beginners because Derek and I really don't use stops. It's just not something. It's not part of our trade plan. We never have a drawdown that we just can't hold. That doesn't come back. So we just rarely use stops unless we place a stop that's in profit, right? And we're letting a position run. So but for beginners, if you're in a 10 pip drawdown, set the target on your position to +1 and re-enter at market price. If in a 20 pip drawdown, close position and re-enter at market price. Now, here's a more aggressive management option, which is more along the lines of what I do. If in 5 pips drawdown, re-enter and set target 1 to +1, then set position 2 to position 1's target. If in another 5 pips drawdown, re-enter again, target 5 to 10 pips, and set the other 2 positions to +1. Okay, that's really close to what I actually do. In fact, I do that exact thing a lot. Okay, now our favorite setups. Check this chart out. This is a money freaking chart right here. Oh my God, so much money right in this chart. It's crazy when you can just tell exactly, each move in the market, I mean, guys, if you could just identify and predict every move that a market makes for 24 hours or maybe even just 1 or 2 trade sessions, how much money do you think you would make? $1,000? $10,000? $100,000? I think you'd make, upwards of 100, maybe up to $1 million. If you could predict every move in a market, I mean, that might sound crazy to make that kind of money, but, it's really not, Once you realize how insanely profitable this strategy is, you're going to be a little bit blown away, okay? So check this out. What do we have here? we have a squeeze. Okay, what do we know about squeezes? Waiting for a 75. Check this out. Break of the bands, 70 above the 75 level. Start stacking your sells right here. Boom, right to the sentiment line. That was beautiful. Beautiful. Check this out. Now we're putting in divergence, right? We put in higher highs, touch the bands. You could have shorted that because we did touch the bands. We're divergent. But you would wait for it to at least touch the band, right? Take your profit right in here. Now again, really strong candle up. Still divergent compared to that. Start stacking on your sells. Boom. There's your profit. Again, more divergence up in here, right into this psychological level right here, which is dashed line. So that was a half level, right? That was like a 135.5. You could have shorted that again, right up into here. Boom. Look at that. Now here's another squeeze. Check this out. You see how close this is? You know, less than a 15 pip range. Bands are squeezing. Strike zone right here. Look how big this candle is. Right down in to our 75. Okay, boom. Buy it. Divergent buy entry, right? Put in a lower low slightly. Was higher on the RSI. Divergent. Buy. Rallied. Okay, now check this out. Here's another squeeze. Now what are we waiting for? What do we know about the squeeze? Waiting for the 75. There it was. Right here. Kiss the 75. Right up into the psychological level. Sell that bad boy. Now we're divergent. Right up into here. Okay, divergent sell. Wait for it to touch the band. Sell it again. Guys, clockwork. Guys, I mean, this is insane. Clockwork does the same thing every day, day in, day out, day in, day out. Guys, you're going to need an ATM in your house, okay, for the kind of money you're going to make with this strategy. And you know what's crazy about this is we just found that it works on stocks. You know, you can accurately predict, accurately identify, I should say, overextended stocks, and it works in binary, okay? Now, I'm just teaching you Forex right now, but this really is the holy grail, guys. This is just insane. Okay. Now let's go ahead and continue a little bit. Now remembering, guys, only trade the extremes. Profit will be made from shark fins, but a shark fin at the 32.68 levels are much more profitable. You have plenty of opportunities, so be patient. Market sentiment line acts as support and resistance, so it's a good place to take your profit, or you can use a static target of 2 to 5 for the 1-minute chart. Avoid tightly consolidating markets. Highly liquid and volatile markets are the best. Ideal sessions for this being London and New York. That's what we trade, okay? Guys, this is insane. This strategy is really just, you know, it's going to totally change your game. You know, you're going to take, you know, a 3-figure account to, you know, 5-6 figures in a few months. Okay, we did it. So we know it's possible. And really, you know, we're nothing, we're really nothing special, guys. I mean, we're just a couple of people who just refused to give up and kept hammering at this thing, testing things until we found something that worked. And you know what's even more crazy about this is people will tell you, oh, you know, there's nothing new. You know, you can't reinvent the wheel in this industry. If you're doing something now, I guarantee somebody's done it prior. Guess what? I've done research on research and research on research. Okay? On this. Okay, there are people that trade with Bollinger Bands. Nobody trades it like we do, though. Nobody has this strategy. This is just, you know, this is a market sharks original strategy, and this will change your game, guys. Okay. Now, I think that's actually it for this. Now, Derek's going to go ahead and pick up where I left off, and he's going to show you some, you know, live charts, you know, show you some trades, and show you kind of how he looks at it. And so you can just get a different set of eyes checking this out. So I just laid out the game plan. I'm going to let Derek take it away, and I'll see you guys in the trade room. Talk to you later.